All right, gang, good afternoon. Hope you enjoyed your weekend. Ready to rock and roll this week. Markets were a little crazy last week, and I expect it to continue. I think we'll see probably 3800s here in the next couple of weeks on the S&Ps. So, starting to play some things to the downside. Let's go ahead and jump into this, see what we got. All right. First one I'm looking at is actually to the upside, and this is AAL, American Airlines, holding that 200-day. It's got to hold the 21 though. If it holds the 21 at least, then I'm looking at selling a 13 put pretty much down at the yearly low here for this to run back up and retrace back up to 22s. Okay, so American Airlines, June, to give it some time, selling these 13 puts for at least 25 cents. Getting 4 contracts to get you over $100 is going to cost less than $1,000, and it's a 92 probability. Really good odds. If you have to define it, right? 30, 60, 90. I really don't like it. There's not a lot of credit. This should be around 93 cents, 99 cents. It's not. But you could do it if you had to, where you'd risk no more than 500 bucks and you get 120 with like 2 contracts with a 1714. And that'll put you below the 50-day moving average and the 200, so you'll be in a reasonable spot, just not all the way down near those lows. Okay. Next one here is going to be FXI, which is the ETF for the China large cap. And looking at a Strangle here, short skewed. So I'd be looking at selling these 37 calls pretty much very close to that 200 days. So you'll have few resistance levels on that side, and then looking at selling the 24 puts, which is going to put you below the yearly low here, leaning it short since it is in a downtrend, but we got a little bit of double-sided action here since middle of March. Okay. On this one, those 24s get you $4 past expected move, which is nice, and then those 37s get you about $3 past the expected move. Try to get at least 35 cents for it, and you should be good there. And this is June. I didn't say that. 86 pop, 3 short deltas, less than $1,000 to put on. Next one's going to be Micron, MU. Okay, this one looking at selling naked, but there is a defined risk version available as well. You can see that Micron, ever since it made the high, really has been struggling and is just dropping down. Rejected the 21 and the 8 EMA on Friday. I'm looking for this to break through the current low here of about 65.80 and then run down to the yearly low of 65.67. There is a light squeeze, so looking for it to drop. So I'm looking at selling the 80 calls, which is going to be above the 200 days. So you're going to have 1, 2, 3, 4, 5 levels of resistance there. Your defined risk will be a 75 call spread, which will get you above this little resistance area here. Okay. So when you look at Micron, looking in the weekly, 33 days out. So it's a little bit more illiquid, but I just don't want to go 47 days yet. Okay, you might be able to get it here and get a little bit further, but I'm thinking short-term quick profit gains. So if you can get these 80 calls in the 33-day cycle, 80 cents with 2 contracts is going to give you 160 bucks for $1,300 in buying power. 86 pop and 32 deltas short, so nice here. Okay, the 75 80 if you can get it at $1. All right, with 1 contract, 77 pop, you'll get your 13 deltas short and you'll risk no more than $400. Okay, and then now I do have a bullish play here, and that's PCG, right? Been pushing up ever since it made its all-time high. It did drop, bounced right off that 200-day, and has gone up ever since. Had earnings, it did gap up, it pulled back with Friday's down day. Has a nice medium squeeze here. Okay, so if it holds this 8 EMA, then I'm looking at a bullish run on this one for a return back and to those all-time highs. Now this is a debit spread because the IVR is low. So PCG in June, to give it plenty of time to return back up, looking at buying those 12 calls, selling those 13 calls, 50 cents to 60 cents is what I would want to pay. Okay, 50 cents will obviously give you 1 to 1. 55, which is mid price, is not that bad. Okay, and what I'd be looking for is 25 to 30% of max profit. So you do a couple of contracts here, and then you have your 50% chance. Okay. Next one's going to be Snap. Now Snap obviously has just been getting beaten up ever since it had these highs. It gapped down and just dropped to new lows. And it's kind of consolidating here with a slight downtrend. So with it rejecting that 8 EMA on Friday with still some strong momentum to the downside, I'm looking for Snap to return back to its earnings lows here down at 24. Okay. So I want to sell a call up here at 39, which is going to be the most recent resistance level. You still got all moving averages in that 40 level. So with Snap, going to be looking at June 3rd again, the 33-day cycle, selling those 39 calls for 30 cents with 4 contracts is going to get you 120 bucks. It's going to cost 1100 to put on, and a huge 92 pop. 44 short deltas. Really good play. Can you define it? It's possible. You're going to have to come up here a little bit. And let's see, you can probably get away with a $2 wide 33.35 that gets you above the 21. I would really like with Snap to be at least 34 or 35, but as you can see, there's not a lot of credit that low. So I'd prefer to sell this one naked just so you can get a 92 pop, but it is doable depending on your risk level here. You can do kind of an expected move, couple of contract scenario there. 77 pops not bad, and you still get a hell of a lot of short delta. Okay. And then lastly, you guys, is going to be Synchrony Financial. That's SYF. Banks have also been getting beaten up here lately, so this one's not doing too hot either. So I'm looking at selling a call again on this one, well above its resistance level. So it dropped hard, consolidated for a bit, rallied into earnings, but then dropped again. Okay, and that momentum is dying off. So I'm looking for it to retest these 33 lows again. By selling a 43 call, you are above all 3 moving averages, the most recent resistance, and hanging out very close to this here at 43.5. So June, because of liquidity, June 17th, 47 days, sell those 43s for 35 cents. 3 contracts will give you an 88 pop, almost 45 deltas short, 105 bucks for $1,100. Can you define it? Again, it's another scenario of yes, you can, but the credit is a little low. You can try a 40-44 for 2 contracts. It's 150 bucks for 650. A little bit high there on the max loss, but it's almost an 80 pop, and 40 does get you well above those 3 moving averages. So that is also doable. Okay. And that's going to be it, you guys. That's all I got for you. Trade small, protect yourself, don't overtrade, and maybe one day I'll see you guys in chat. Take care.